Bitcoin has just reached the 16,000 horizontal and psychological support. Are we going to continue down, or will this be a reversal point for a continuation, possibly back up? Let's go ahead, dive into the charts and take a look. Okay, MegaWhale team, welcome back to the channel, guys. Thanks for tuning in. I hope you're all having a fantastic day. We're going to go ahead and get into the Bitcoin update. We're going to be talking about the short term, the macro. We're also going to be talking about how you can manage FOMO when trading, and so much more today. Now, before we get started, head down to the pinned comment, click the link to our Telegram channel. You've got updates on all of our charts, analysis, information, and so much more. You won't miss a thing. We post all the relevant, informative, and important things that you need to understand the macro and the short-term price action in this channel. Of course, if you're interested in VIP, you get access to all of our trade signals. As you can see, just in the last few days, 182% profit on Matic. We saw just today a 70% profit on DYDX. So huge profits. You can contact me to get access. Remember, guys, smash the like button to show support, comment, and subscribe. Let's get into it. So before we get started, we'll go over our basic stuff. For the month so far, negative 21.18% negative for Bitcoin. It's quite a red November, guys. We're pushing up to the second most bearish November we have ever seen. You know, we're coming close to our 2018 November, which was 36.57%. November is usually actually a good month for Bitcoin. So seeing this such a red November is quite a shocking thing. Obviously, FTX crash has definitely contributed to that selling pressure this month, scaring a lot of people out of the market. Moving on, guys, volatility has pumped up just a tiny bit from about 4.06 to 4.09, not really indicating too much. Of course, as the volatility rises, we generally get these more aggressive swings in the price action, which provides some good opportunity for trading. And finally, liquidations aren't incredibly high, they aren't incredibly low. We're around 124 million in the last 24 hours. Of course, a lot of people kind of getting chopped out over here, but it's not too bad considering the volatility and considering the price action. Sometimes we expect it to be a lot higher. 120 million isn't too high. So let's go ahead and get into the price action for the traditional markets, and then we'll go ahead and talk about Bitcoin. So DXY obviously opening up today over the weekend. It is usually down, it's usually closed. So we didn't see much price action for Bitcoin over the weekend. We saw that sideways consolidation. But if you've been following the videos and you've been keeping up to date, you would know that sideways consolidation, we did expect to come to an end. And that was, of course, this ascending trend line over here, this descending trend line over here, this pennant formation. This was the weekend price action. We said by the open of the week, we should see some more volatility coming to the market. When the market decides what it wants to do, we should see some more volatility and see a directional move. We saw a directional move to the downside, as we discussed in yesterday's video and as we discussed in the Telegram channel. But moving on, guys, we did see the DXY find temporary support around 106 level. We are kind of testing it now. We haven't technically found support at it. We haven't technically bounced. We're just kind of flirting around that trend line, testing it. Now, we already know, guys, if DXY goes up, Bitcoin goes down. If DXY goes up, traditional markets go down. Okay, that's inversely correlated. So taking a look at the total crypto market cap, we did actually reject from this level. We've pushed down over here, and we're finding some temporary support along 2 points. And the 2 points of interest right now is, of course, this absolute low we printed over here in June, okay, as well as this absolute low we printed here in November. Those are 2 key points of interest we'll come back and talk about in just a moment. The Dow Jones have rejected from the $34,000 level, the level we're talking about for weeks, moving up to that level. Of course, this is a key level on the charts we do need to actually break above, as this would clear this high point over here that we actually formed. Let me see what month that was. In August, moving past that level, we do have a pretty clear shot around 35,000. Rejecting from this level, of course, we will be heading back down towards 33,000, potentially even retesting this downward trending support line once again. S&P 500, more or less the same over here. Of course, this rising, should I say this declining, expanding wedge, downwards the resistance line is sitting slightly higher than what it is sitting on the Dow Jones. We do see a resistance at 4,000. This is a psychological resistance point. No surprise, DXY finding support, the market's finding resistance. We should expect to see a drop back down to this trend line if we do reject, and of course a continuation up to this trend line if we are able to push through. A lot of that rests on what the DXY does next. Bond yields have found temporary support. Of course, DXY's moved upwards. We've seen the same thing on the 2-year government bonds with a slight move upwards. And of course, Bitcoin dominance is pushing upwards slightly, but sitting around that 40% level as we have been for the last few days. Let's go ahead and get into the analysis. So we're going to start on the total cryptocurrency market cap. So we have come down to a very interesting point. And that is, of course, the distance or the area between the 2 lows we have printed in June, and of course a recent low we printed from this crash. This is a major support zone now, okay? Now the reason why this is important because it can indicate points of potential reversal or bounces on the chart. And we have to kind of like take a look at this, and we have to take this data, look at where it is on the total cryptocurrency market cap, and then go ahead and look at Bitcoin and see if we see any similar patterns develop on Bitcoin. At the end of the day, guys, Bitcoin accounts for about 40% of the total cryptocurrency market cap, so they generally move the same directions by different ratios. So let's take a look at Bitcoin. So we saw that move downwards, guys. We saw that target be reached, which was that gray zone. We said if we break from this total cryptocurrency, we break down from this pennant formation over here, we would expect a move downward towards this gray zone. And we saw a move downwards towards that gray zone. So the question is next, where will Bitcoin go from here? What will happen if it goes down? And what will happen if it goes up? And what will it take for those moves to occur? So let's take a look. So first and foremost, we have outlined this downward trending resistance level. This downward trending resistance being basically the resistance point, or this upper resistance point of this entire downtrend we've been in for the last, what has this been? About 3.5 days, okay? So what we already know is for us to see any sort of continuation upwards, any sort of strength upwards, we will need to be breaking out of that downward trending resistance. So we will need to get the price action above this trend line to find any sort of continuation upwards. For the downside, guys, we have actually retested the $16,000 support level. If we are losing the $16,000 support level, the key level next is this area between 15,700 and 15,500, going back to the total cryptocurrency market cap. That will bring Bitcoin's price to around that point as the total cryptocurrency market cap touches the $737 billion range, okay? So back to Bitcoin. That is the key area for the short term for support. Now, flipping the chart, we can see one thing. If we do push above that level here, we can see we have a pretty clear shot at a continuation upwards, okay? This being a pretty major resistance. So what we're looking at upwards over here is if Bitcoin price can continue downwards, okay? This is an inverted chart, so continue upwards, break through this level, find support at this level, we will expect a continuation upwards. Of course, if we break through this horizontal, should I say diagonal uptrending support level, we can expect a move backwards towards this 16,700 level, which is in fact a very key resistance on the Bitcoin chart as we have seen over the last few days. So what is it to do now? I don't think right now, particularly right now, is the best time to be taking positions. We've already completed this downward move from here. That short position has already been completed. We're in a support range now. Bitcoin's price is trying to decide whether it wants to make a final move downwards here before we consolidate and then make another directional move, or if it wants to make a move upwards to retest this downward diagonal resistance here before it breaks through this downtrend and makes a continuation. So right now, the best thing to do is to be waiting for the next short-term move and then capitalize. The trigger for the move upwards, of course, the trigger for the move upwards over here is a very simple one. We're looking for about an hourly close above this downward trending resistance. If we go to the hourly chart, you can see that we haven't actually closed the hourly candle above this diagonal trend line since the inception of the trend line, which was that retest again on the 13th of November, which was about 2 days ago or a day and a half ago, over here, okay, 2 p.m. Australian time. As you can see, this downward trending resistance formed over here on that second touch, and then it's been resistance ever since. So a break above this downward trending resistance would be that trigger on the hourly for a continuation upwards, okay? For a continuation lower downwards, we've already talked about that. We're looking for an hourly close below this level here. So total cryptocurrency market cap, what is it telling us on the macro? Where can Bitcoin go if we do actually continue downwards here? What will be those price targets? Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC. 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game, And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So if we go ahead and zoom out on the total crypto market cap, we'll be able to see a few things. We'll go to a 7-day chart. We can identify a few key zones of support. And the first one I want to talk about is right now, the total cryptocurrency market cap is actually retesting and finding support on the 2017 high. This is very relevant, okay? This is very, very incredibly relevant, because the total cryptocurrency market cap is almost just as, if not more important in terms of price action than the Bitcoin's price action, because this defines the entire market. This tells us the strength of the entire market. Bitcoin happens to be about 40% of that market. So the total cryptocurrency market cap is finding support and bouncing. It doesn't really matter where Bitcoin is, it's more likely to find its relative support and continue as well. So they kind of follow. So looking at where the total cryptocurrency market cap is right now, retesting the 2017 all-time high, it could be an indication that Bitcoin is going to find some pretty strong support at the 16,000 level, and this could potentially result in a continuation upwards back to this range. This is something we're keeping in mind. This is something we're looking at. Of course, losing the 2017 all-time high and losing the $740 billion support, which is this lower level here, will result in a continuation to this next major support block, which of course is this 2020 December crunch zone. Okay, very important level. Losing that level sends us down to here, and of course, if that occurs, we already know where Bitcoin goes. It will be going down to this $11,000, $12,000, $13,000 horizontal support range, which happens to line up with that diagonal support range over here. Okay, so those are the key points on the chart. So keep an eye on those, keep a lookout. But right now we are finding support, and we do expect a potential bounce. And what we'll be doing now after this move downwards is we'll be looking for potential long positions. We're looking for potential positions that we could be maybe looking for longs on until proving this trend is going to continue down. Okay, now we're going to get into a little bit more, but I do want to talk about a question I was asked a few days ago by a member, and this member having a little bit of problems with FOMO. So he asks, how can I manage my emotions and FOMO better? So generally there are 2 ways you can manage your FOMO better. The first one is knowledge and understanding, and the second one is risk management. So we're going to go over those very, very briefly. So knowledge and understanding. Why can that help you understand how to manage FOMO? Well, FOMO is driven by 2 things. It's driven by fear and greed. That's what it is, fear and greed. Greed being you want to jump into the pump, you don't want to miss the profits, and fear being basically, you're too scared of missing those profits, so you want to jump in. They basically, go hand in hand. So if you understand that every single day the price action is going to move, every single day is a new opportunity in the market, every single day, there's always a new chance to make money, you're never really going to feel rushed to make decisions. If you see a coin go up and it misses your entry point, you didn't get in, you missed it, and it goes up 40%, it doesn't matter. You're not going to FOMO because you understand tomorrow's a new day, there's always another trade, you can get another opportunity, okay? And when it comes to risk management, guys, if you do have a set risk management strategy in place, you're going to stick towards that risk management strategy, and you're never going to jump into coins that are up 40% just to make another 5%, because it doesn't match your risk return strategy. Okay, and a good risk reward strategy is about a 1 to 2. So you're looking at taking trades that have no better or no worse risk return, about 1 to 2, meaning for every 1% you would lose on the trade, you'd make 2% for the profits. Okay, so a risk reward of 1 to 2 minimum. Okay, so that's one way you can manage FOMO. We can get into a bit more later, but a quick, brief little summary is make sure you have a risk management strategy and you stick to it. Make sure you understand risk management, and most importantly, understand the market, have knowledge on how the market moves, and understand that you don't have to trade every day, and you definitely don't need to jump on every single move. There's always a new opportunity to make money in the market, and that is a great thing. Don't ever feel pressured. Don't ever feel rushed, and definitely don't feel like you need to chase trades to make good money. It doesn't need to happen, okay? I think I'm gonna go ahead and jump into the larger time frame again, and we'll do a quick technical analysis. So we've talked about this zone already. And I want to go over it again, but this is really important. This zone over here, this low volume historical range zone, is a really important zone. And as we've said already, just because it represents the area of low volume, it doesn't mean we can't find support and create new supports in this range. As we've seen already, the total cryptocurrency market cap is retesting the 2017 all-time high. Bitcoin is retesting the potential $16,000 level. There's a chance we develop a support here. It's a low chance, but it's a support. The chance we develop a support, okay? So we're looking at the VRPV by itself. It indicates this area, this price action between about 19,000 to about 12,000 is a very low historically trading volume range. Means that historically, in terms of horizontal ranges, we don't have a lot of trading volume here. Therefore, the price generally moves faster and more aggressively through these zones where we don't have as much trading volume. We saw another one over here. If we look at 28,000, okay, to 25,000, we saw a very similar thing occur here. We saw a very quick move between this level. Obviously, this overextended and went downwards, but we saw that occur. We saw this huge gap over here in the VRPV, and we saw that explosive continuation. Basically, as soon as we lost that support level, we saw this price just gap downwards. And we're seeing a similar thing over here. The moment we lost the support level on the larger time frame, we saw a pretty aggressive gap downwards, and now we're going to be basically laddering down, finding minor supports along the way. Over here's a minor support, okay, sitting at 16,000. That of course lines up the total cryptocurrency market cap 2017 all-time high. So below that, we do have a little bit of some dips and some values in the VRPV, suggesting slight areas of higher volume and slight areas of lower volume, but nothing too extreme until we reach $12,000 again, which is this point on the VRP right over here. You can see this instant jump up in historical trading volume. This is instantly or immediately indicating that next major support level. And of course, we can find support along the way. We can develop support along the way. At some point, support has to be developed and created, and that means that just because on the VRP it doesn't suggest any support is between this level, it doesn't mean we can't create support within this level. So very important thing to keep in mind. So VRPV is in fact suggesting we potentially go lower. That is a very interesting piece of data. If we go ahead and look at the Gaussian channel, and we'll go to the daily to start off with, we can see we did get rejected from the Gaussian channel. Again, we pushed upwards, we broke through, which is of course bullish for the Gaussian channel, but obviously we had the 50 EMA on the 2-day chart, which basically acted as a major resistance point over here, and we rejected from the Gaussian channel midline, pushing us much lower. We already know, guys, the Gaussian channel is an incredible tool at predicting points of where we could see continuations in reversal points. It doesn't indicate actual reversal points. It represents points of which we can see continuations in those reversals, such as here, we see that continuation through, again, rejection. But generally, when we enter the Gaussian channel from the upside in, we generally see a move throughout the Gaussian channel. When we enter the Gaussian channel from the bottom side up, we generally see a move throughout the Gaussian channel and vice versa, unless we find resistance or support at the midline as we had done this time. So we're looking for a break back into the Gaussian channel on a larger time frame to actually help us confirm a continuation. But of course, the Gaussian channel itself will not tell us when the bottom is in. It will not tell us the exact point of the bottom, and it won't really tell us when to buy. It more or less tells us the strength of the trend. On the 2-day chart, we're still looking at the 50 EMA. We are hoping to see a cross back over the 50 EMA again. On the 2-day, two separate 2-day candle closes above the 50 EMA on the 2-day chart will be a great indication that this entire downtrend has been broken, and we're looking more optimistic for the larger time frame, waiting for that, of course. Ichimoku cloud on the 2-day chart, again, not looking too great. The 2-day cloud was really came in clutch to predicting these fake outs, of course, rejecting from the clouds on the 2-day. If we go down to a 1-day chart, we can see not too much is occurring. We have had a very steep amount of price action in the last few days. We've had in the last couple of days a negative 26% move. So a lot of these indicators, guys, are going to be lagging now, particularly on the smaller time frames. They're going to be lagging. They're still going to be adjusting to this sharp steep volatility, particularly after a period of basically, strong sideways price action for like 30-40% swings. After seeing a 30% move downwards, a lot of these indicators are going to be lagging, and therefore the best way to be trading right now, and the best way to be looking for points of macro reversals, are looking at structures and horizontal supports, not technical indicators. We're purely looking at technical indicators on the smaller time frames to take a look at the strength of the trend and try understand, whether we can see potential bounces at these key points of interest. Okay. That being said, guys, I'm gonna leave the video. I hope you enjoyed the video, and I'll catch you guys in tomorrow's one. Tomorrow's video is gonna be interesting. We're gonna be talking about 3,000 and 10,000, 2 points of price action people are discussing a lot. And I wanna go into a lot of depth talking about why I believe $3,000 is simply not possible. It's an unrealistic target. And of course, we'll talk about 10,000 as well. We're also gonna talk about how the bull market could restart, where the price action would actually need to come to see any sort of macro reversal in terms of uptrend, and so much more. So we'll see you tomorrow. Cheers.